Welcome to the Thursday edition of Tech Stocks Daily, where we sift through the latest financial escapades and tech titans' antics on the NASDAQ you can't wait to hear about. First, we're zeroing in on Microsoft's striking balance of growth and potential, despite a bit of sales flutter. Next, we cruise over to Apple, where thrilling leadership reshuffles and the promise of AI innovation are setting the stage for explosive opportunities. And hold on to your tech hats, because we dive into Kyndryl's roller coaster ride after a short seller's bombshell report that's got the stock world buzzing. Buckle up for a dynamic journey through today's top stock stories that might just revamp your investment strategy. All right, folks, buckle up because we've got some red-hot tech scoops flying your way today, straight from the glossy halls of the NASDAQ. Our first big story centers around the ever-enigmatic software giant Microsoft, where the numbers are in, the charts are tallied, and investors have their powerful magnifying glasses aimed directly at Redmond's finest. So why is Microsoft grabbing the headlines today, you ask? Well, investors and finance nerds alike have been busy crunching the numbers, evaluating Microsoft's performance against its primary competitors in the always competitive software industry. As they sift through the data, several key metrics paint an intriguing picture of Microsoft's market stronghold, profitability, and growth potential. First up is the price-to-earnings ratio, holding steady at an admirable 31.42. Now, this charming number might sound like someone's lucky roulette pick, but what it really signifies is that Microsoft's potential for growth comes with a reasonable price tag, something investors adore, like cats do cardboard boxes. The PE ratio stands just 0.4x over the industry average, suggesting Microsoft might just be that bang-for-your-buck opportunity that investors are always diligently searching for. Next in line, the price-to-book ratio scoots into the discussion at 9.58. Leaning nicely below the industry average by 0.41x, Microsoft appears to be wearing an undervalued hat in terms of asset valuation, which could mean those clever number crunchers see some layered potential that might just make shareholders smile like kids on a merry-go-round. But the analysis doesn't stop there. It's going for the trifecta. The price-to-sales ratio, messing around at 11.13, tells an interesting tale. This ratio jumps 1.4x above the industry's average, hinting at a touch of overvaluation where sales performance is on the table. It's a saber dance between high revenues and high expectations, folks. Let's pivot to the financials that'll have you nerding out. Microsoft's return on equity, that's a fancy way to say how well they make profits from shareholders' equity, is a cushy 8.17%, sitting pretty at 0.76% above its rivals. Profits not only lean strongly on efficient equity use, but Microsoft's EBITDA showcases a brawny $36.799 billion powerhouse, zooming a gigantic 56.6x above the norm. Microsoft's got strong bones with a skeleton of $47.83 billion in gross profit, 35.17x higher than the industry's vitamin D deficient norm. Yet revenue growth is fluttering a bit lower at 12.27%, shortchanging the 12.5% industry parade butterflies by just a smidge. Lastly, let's toast the company's solid backing with its low debt-to-equity ratio, a healthy 0.21 sparking envy across boardrooms. Microsoft steers clear of an all-debt road trip, maintaining a golden balance that states confidently, "We have whatever it takes gumption," in the lifeline that is financial health. As the echoes of investor calls fade, one thing remains clear. While Microsoft wears some scars of a challenging sales vista, its efficiencies in profit, equity mastery, and market standing have earned it a spotlight, leaving an undertone word: potential. Let's see if they conjure some magic to give their revenue its caffeine kick. Hey tech enthusiasts, let's dive into what's buzzing in the Apple universe today and see why the Cupertino giant is making headlines again. First up, Apple is back in the spotlight with bold predictions about its future growth. But it's not all sunshine and rainbows. The company, known for its revolutionary devices, has been noticeably floundering in the artificial intelligence sector. Unlike its peers, Apple was late to the AI party, and its efforts have yet to dazzle. Apple's AI-powered virtual assistant, Siri, described rather unflatteringly by a former senior director as ugly and embarrassing, underscores these challenges. However, don't count Apple out just yet. Analysts still have faith, predicting a bright future once Apple optimizes and markets its AI offerings effectively. The intelligent virtual assistant market is poised for rapid growth, and many believe Apple is just on the brink of unleashing its potential. With shares inching up and analysts hazarding a concerted buy, the market pulse remains optimistic, anticipating a skyward trajectory for Apple stock. But wait, there's more than just speculation behind those headlines. Apple is also making strategic moves in its executive suite. The tech titan is reportedly shaking things up by creating a new role, Vice President of Stores and Retail Operations, believed to be a nod toward long-term succession planning for the incumbent Senior Vice President, Deirdre O'Brien. Vanessa Trigub, a company veteran since 2007, is the name circulating for this position, poised to oversee global retail operations. This move hints at an astute strategic grooming plan for future leadership, reflecting Apple's knack for staying ahead in its management core. Now, pair this development with Apple's earlier decision to shake up its Siri leadership, and you can see a pattern emerging. Just recently, Apple handed over the reins of Siri from AI chief John Giannandrea to Mike Rockwell of Vision Pro fame. These are subtle yet significant maneuvers indicating a drive toward reinvigoration. Why does all this matter? These shifts offer a window into Apple's foresight strategy, keen on recalibrating both its tech offerings and its central leadership to tackle looming challenges and seize growth opportunities. Aligning leadership and technology signals readiness to leapfrog into the next innovation cycle with finesse. Adding some numbers to the narrative, Apple wrapped its first quarter in style, clocking in revenue that surpassed expectations, though recent trading figures showed minor dips. So the financial front is holding steady, but strategists and investors are watching these leadership moves and AI efforts closely, waiting for them to coalesce into a compelling narrative for Apple's tech future. So Apple watchers, stay glued as we track their journey of big bets, key changes, and the pathway to redefining AI success. Stay tuned, because in the tech world, as we know, everything can change at the click of a button. All right, tech enthusiasts, let's dive into today's stormy seas, aka the news on Kyndryl Holdings. Buckle up, because it's a wild ride filled with financial drama, some high-stakes accusations, and a call to action for investors. Kyndryl Holdings found itself amidst a whirlwind today, largely due to a bombshell report dropped by Gotham City Research. For those who shotgun energy drinks labeled short seller favorite, Gotham City is no stranger. They've kickstarted quite the ripple effect by alleging some shady business under Kyndryl's financial hood. According to the report, this IT infrastructure company, which spun off from the juggernaut IBM in 2021, has been artificially inflating crucial financial metrics like its EBITDA and free cash flow figures. That's like someone borrowing lifts from the DeLorean for their financials, readjusting reality to a potentially startling degree. Now, this has sent Kyndryl stocks into a nosedive equivalent to someone's heart rate when they realize the low battery icon on their phone isn't joking. Shares tumbled hard today, dropping over 14% at one point. Investors, meanwhile, were spotted running metaphorical fire drills, wondering if there was still time to save themselves or if they were already on board the Titanic after having crashed into the iceberg. But wait, there's more drama. Block & Leviton, a securities law firm renowned for pursuing securities litigation, has announced its own investigation into whether Kyndryl breached any securities laws. They're essentially the Wyatt Earp of securities law, rallying investors who've taken a financial hit from this slip to maybe recover some of those losses. Whether you're living out your drama as a stockholder or an armchair detective, it's enough to keep you coming back for this saga's next episode. Kyndryl has, of course, pumped the brakes on this roller coaster like an aggrieved biker claiming those weren't their tire tracks. They've dismissed the claims as inaccurate and deliberately misleading, presenting themselves as faithfully diligent in their reporting practices. But until that response does more than just linger in our headlines, the stockholders might consider hanging on to their metaphorical inner tubes, just in case. Folks, this kerfuffle with Kyndryl really opens up a can of worms about transparency and trust in corporate operations. Should companies taken to task by short sellers wield more transparency, or do they sometimes become unfair targets of financial bullies? Or perhaps, are we witnessing industry vigilantes doing investors a favor? I, for one, have my popcorn ready for how this all shakes out, but I want to hear from you. Are you Team Gotham or Team Kyndryl, or simply just entertained from the sidelines with your front-runner uncertainty? Hit the comments and spill those thoughts. Let's get this comment section lit like a coder's terminal during debug hour. All right, let's play the stock market game and zoom in on Apple today. Because if there's one thing juicier than biting into one of their iPhones, it's diving into their latest moves in the tech world. So would I buy, sell, or hold Apple stock based on today's buzz? Given the context, I'd lean toward holding onto Apple stock at this moment. Here's why. 1. Bright predictions and faith in AI potential. Despite Apple's sluggish start in AI development, analysts are placing bets on a significantly brighter future. They expect Apple to sharpen its AI offerings, especially if they power up Siri and leverage its potential for pairing hardware with cutting-edge AI-driven software. This optimism offers an intriguing canvas for future growth. 2. Strategic leadership reshuffle. Apple's maneuvers in the leadership realm, like the potential appointment of Vanessa Trigub and the shift in controlling Siri, suggest they're laying the groundwork for some riveting shifts. It signals an acknowledgement of the challenge ahead and demonstrates intent to refresh their ranks and maybe their tech strategies too. Number 3. Financial tenacity. With its first quarter revenue exceeding expectations despite minor trading dips, Apple maintains financial solid footing, offering stability in what often feels like a turbulent tech sea. Now, it's essential to mix realism with anticipation. Apple is shedding older habits, and there's speculation around their AI's growth. But it's also a conglomerate known for setting trends, not just following them. So before you hit that buy or sell button, remember, this perspective is all about the peek behind Apple's Cupertino veil and understanding its current trajectory. And here's the golden rule. Do your own research. Dive into financial reports, stay attuned to their announcements, and grasp your risk tolerance before you pull the trigger. The tech world's pace might make your head spin, but informed decisions have you holding the joystick. Keep on exploring, and may your investing journey sparkle like a new iPhone on launch day. What a whirlwind of a day in tech. From Microsoft's rock-solid financial metrics keeping investors intrigued, to Apple's dynamic leadership shuffle and promising AI horizon, There's plenty to talk about. And let's not forget Kyndryl's roller coaster drama that unfolded today, gripping us with their financial controversies. It's clear the NASDAQ tech titans are keeping us all on our toes. If you enjoyed today's breakdown, don't forget to like, subscribe, and share this video with your fellow tech aficionados. And be sure to swing back tomorrow for more electrifying updates in the ever-evolving world of technology.